welcome to this episode of Phillip Futures Market Watch. My name is Jonathan Chan and I'm an investment analyst with Phillip Futures. Today I'll be presenting to you the Q2 2017 Gold Review. Gold prices have been generally trading upwards since the beginning of this year, though with greater volatility. This episode aims to give you an overview on the different foreseeable fundamental drivers driving gold prices to help you react accordingly to the materialization of different developments. I have broken down these drivers into bullish, bearish and mixed. Geopolitical uncertainties continue to remain a bullish driver for gold prices. On the other hand, a recovering US economy and generally improving US corporate earnings continue to serve as bearish drivers for gold prices, while US interest rate hikes have been observed to be a mixed driver. Currently, there are many geopolitical uncertainties that are expected to drive gold prices up should they actually materialize or if the situation further worsens. Firstly, we have the final round of the French presidential elections happening this Sunday, 7 May 2017, between the hot favourite Emmanuel Macron and Marine Le Pen, the Brexit advocate. Currently, markets are pricing in Mr. Macron's victory. If Ms. Le Pen is suddenly unexpectedly winning or seen to be winning, gold prices are expected to head higher. In the US domestic political scene, there might be more congressional deadlocks between the Democrats and the Republican parties over bills such as Obamacare replacement and President Trump's tax reforms. If these Republican-sponsored bills fail to pass in Congress, financial markets will start to doubt some of President Trump's Make America Great Again plans and start piling back into safe haven. Second bullish driver for gold prices will be an escalation of tension in the Korean Peninsula. Currently, the North Koreans are embarking on a game of brinksmanship, conducting missile tests after missile tests. US and South Korean forces are in a heightened state of military readiness. Given that tensions are running high, there is a risk that a small miscalculation might set off an armed conflict and destabilize the peace in the Korean Peninsula, and this should drive gold prices higher too. Moving to the UK, there is the snap parliamentary election that is slated to take place on the 8th of June 2017, where UK Prime Minister Theresa May is trying to consolidate her power and strengthen her mandate before she heads into Brexit negotiations with the Eurozone authorities. In the unlikely event that she fails to retain her premiership, this would create more uncertainties in the UK's Brexit negotiations, and this would serve as a bullish driver for gold prices. Even if she comes out stronger after these general elections, she still faces an uphill task of attempting to secure favourable terms for the UK. Moving on to bearish drivers of gold prices, the US economy has been improving over the last few years. As can be seen in the chart, US unemployment rate has fallen back to a decade low, currently at 4.5%. US average wage growth has been averaging around 4% over the last 3 years, indicating healthy wage growth. US inflation rate has been increasing over the last 3 years after briefly dipping below zero in 2015. The current rate is back up to 2.4%. This comes after the previous 4 years of disinflation. These indicators highlight that the US economy is improving and investors will generally be more risk-seeking in their investment preferences and thus be less inclined to hold safer assets such as gold. US corporate earnings have risen over the past year by 33% to US 1.6 trillion after having fallen by 25% in 2015. Rising corporate earnings in general are expected to attract capital fund flows back into equities and out of safe havens assets such as gold. Thus, this provides downward pressure on gold prices. Now moving on to the US rate hike factor, gold prices have been observed to fall in anticipation of a rate hike, but tend to rise back up after the anticipated rate hike is actually announced. Gold prices are likely to continue to follow this price action pattern as prescribed in behavioral finance, where market participants tend to trade on the rumor and close their position on the fact. The rising inflation level in the US that is causing the Fed to hike interest rates is also the very same factor causing gold prices to rise. Gold has always been seen as an inflation hedge throughout history. To summarize the content of this episode, geopolitical uncertainties are expected to be bullish drivers for gold prices, while the improving US economy and corporate earnings will serve as bearish drivers. US interest rate hikes are expected to be mixed drivers given historical observations. Where gold prices will head towards in the future will be determined by which of these factors is the most material at the time, and also which is weighing most heavily in investors' mind. Here at Phillip Futures, we offer many different products for you to gain exposure to gold prices. For those looking for higher leverage products for shorter term trading opportunities, we offer OTC gold as well as gold futures listed on multiple futures exchange. For those looking for a minimal leverage investment product with a longer investment horizon, and for portfolio diversification purposes, we offer a gold product called Gold Direct Investment. Do contact us at the following means if you are interested to find out more or to trade. We look forward to hearing from you. With this, I end this episode's Phillip Futures Market Watch. Thank you for your time and we hope you will join us again. Subscribe to us on PhillipCapital Facebook and YouTube for more videos. Until next time, my name is Jonathan Chan and I'm an investment analyst with Phillip Futures. Goodbye.